Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon, and thank you for making time today.
Happy to be here.
Well, let's start with stocks on Wall Street, where despite retail sales in the U.S. coming out stronger than expected, stocks were down. The chain store Target, for one, says sales were down by half in the third quarter, and the holiday season doesn't look good. Its shares down sharply, but competitor Walmart was up. What's the story in the global markets?
Well, the markets were down on Tuesday and Wednesday, even though they were up on Monday. And it does seem like what you have just said, the Target reporting a decline in sales did affect the market negatively. Another factor may be that the Fed is sending mixed messages on what they're going to do with the interest rate in the future. Now, all parties do seem to agree that for December, they will raise the interest rate probably at 50 basis points. But after that, for next year, there seems to be a divergence of opinion, and we seem to be getting a split between the doves and the hawks again. The vice chair of the Fed, Leo Brainard, and Christopher Waller, governor, seem to be indicating that the rate of increase for interest rates will be slower in the future, but the hawks like San Francisco Fed President Mary Daly says that we cannot stop the rise in interest rates, and the interest rate may peak at 4.75 to 5.25%, which means at least more than a 1 percentage point increase further increase in the interest rates. Now, the Producers Price Index came out for the United States, and it reinforces the news that we had from the Consumer Price Index. The inflation is still high, monthly at 0.2%, 12 months at 8.0%, but they are down from September. And the core Producers Price Index for the last 12 months has come down from 5.6% to 5.4%. But nowadays, good news may be bad news depending on how it may affect the interest rates. The core personal spending increased by 0.9% over the month of October, and that seems to be indicating that spending is still strong. Meanwhile, Jason Furman, who is a researcher, senior researcher in Peterson Institute for International Economics, has carried out some calculations. And if we account for shelter contracts are difficult to calculate because they are an average of the housing contracts rent that were carried out in the last year. But if you just took the latest contract, because of how shelter prices are coming down, core inflation may be as low as 2.8%. For Asian markets, for today's market, Nikkei, Shanghai, and Hang Seng were all down. The fear of slowdown in Chinese growth is keeping the oil prices down as well, which may be good news. Right now, the oil prices are holding at about $85 per barrel for West Texas Intermediate. For Europe, yesterday, DAX, FTSE, and CAC were all down. Today, only FTSE has opened so far, and it's in the negative. The UK has recorded highest inflation that they have seen since 1982 at 11.1%, and Europe is expected to go through a tough recession.
Well, Professor, the reasons you mentioned and these concerns about the American consumer seem to have sent Korean stocks lower today, too, led by car makers and chip makers. Only one name in the top 10 was higher for the day, and that was Kakao. Tell us about the domestic market.
Okay, well, for today, the Kospi was down 1.14%, ended today at 2,449.26. Individual spot, institutions and foreigners sold. Kosdaq was down 0.75%, ended at 737.53. Individual spot and institutions and foreigners sold. Right now, the Korean exchange is reporting that listed companies' operating profits overall were down 30%. And fourth quarter looked even more pessimistic. Year to date, Kospi is down about 18%. Kosdaq is down by about 29%.
And meanwhile, the exchange rate was back up today, crossing various points above 13.40 to the dollar. A lot of things going on here, but we do see the dollar index has come down a lot lately. What do you see happening on the currency front, Professor?
Okay, well, right now, for the last month, the Korean won has appreciated by 6.2%. Year to date, though, it's depreciated by 12.88%. But in the month of September, we had a rapid depreciation where Korean won depreciated considerably more than other currencies. But now, because the Korean won has appreciated more than other currencies, right now the Korean won seems to be in the middle of major currencies in terms of year-to-date depreciation. Euro has depreciated by about 9.6%, British pound by about 13.7%, Japanese yen 21.3%, Chinese yuan about 12%. So Korea is in the middle there at about 12.9%. Now, because the interest rate differential between Korea and U.S. is expected to increase to over 1 percentage point by the end of the year, the Korean won will probably depreciate from here on. But because we had a rapid depreciation and then a rapid appreciation, we may not go beyond 1,400 if we're lucky. But still, if the U.S. decides that it needs to accelerate their interest rate increases, then we may have another very rapid depreciation like we saw in September. But for right now, expect slow and steady depreciation rather than anything rapid. I do not expect continual appreciation of the won until the end of the year.
So this relief ultimately could be just for a little while. We'll have to see how that goes. Professor, thank you as always for coming on the program. Appreciate your insights.
Thank you.